From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for January 24th, 2017. Today we're going to be taking a look at the EURUSD, the Euro, versus the US dollar 4-hour trade analysis. Quickly taking a look at our news calendar today. During the US trading session, we have very light news calendar. There's not much on the calendar for the US trading session today. Just right around the 10 a.m. hour. Just before it, we have some US news. Right at 10 a.m., we have some US news, low to medium impact. The rest of the day, though, we have some low impact news out of Australia shortly around 10:30 a.m. And then much later today, during the evening hours, 7:30 p.m., we have some significant news out of Australia, but again, that's after the U.S. trading session, so you want to make note of that on your financial calendars. Diving in here to the euro dollar, we're looking at the daily time frame. Two trends we're going to contend with here: the previous downtrend, the blue trend line, and the current uptrend, which is the black trend line. I say, with such a light news calendar, we just go with the status quo. We don't look for any exciting changes to happen here for the euro dollar today until something exciting happens. That's what we're going to go with. So what we're looking at here is this blue shaded area right around 1.700, close to the top of the black trend line. The reason I want to look at that is I go back here where the blue circle is, and you can see what happened back here the last time the market was in between the blue and the green shaded area. Clearly, 4 days there found resistance into the green zone, 1.0765 up to 1.0795. That's the green zone where the market found resistance where the blue circle is. And even yesterday and so far today, finding resistance 1.0765. The blue zone, of course, at the bottom of the blue circle was the support. That's close to 1.0700. So for the day today, I think we can assume for some intraday trading that we'll find resistance here at 0.765. And we'll find support here at the 0.700 level at the blue shaded area. And if we're going to see a breakout or trend continuation, we're going to look for a breakout above the green zone. So if you're looking to buy this currency pair, I think there's two reasons to buy it. In the direction of the black trend line, the current trend. Forex Black Book, by the way, at the very bottom of the chart is green, so implying a bullish momentum. So if we're buying, we're either buying at the blue zone, 0.700, or above 0.795, which is above the green shaded area. And so there's really no reason to buy it at the current moment. That's where we would want to buy it, but there's no reason to buy it until one of those two things happens. Now, do you want to take a chance on a short from the 0.765 level? Possibly. I think you want to find your lowest risk and highest reward opportunity. That would be it for the time being, unless we see that dip down. I don't think I would go short unless it was close as possible. 765, probably even into the green zone, 765, 795, inside there to provide you with your lowest amount of risk. I think buying is a better idea, though. Taking Fibonacci from the top of the blue trend line down to the lowest low, so high down to low of that range, puts the 382 at 1.0706, which again, top of our blue shaded area. So we broke above the 382 of the blue trend. We're looking for it to settle back on top of it as support here for the euro dollar. Let's go ahead and take it on down to the 4-hour time frame. It doesn't change any of that. It just gives us a little bit of a tighter view of what's been happening over the past several hours. We did see the market touch into 0.765 already for a number of 4-hour candles, falling off it already a little bit. So I think, again, if you're looking for lower risk and higher reward, you would want to go short or sell it as close as possible to that green zone to minimize your risk when you're trading against the trend. The other thing that we could be looking for again is the buy scenario. The buy scenario would be buying on a dip down into the support zone, which again we've already highlighted as our blue shaded area down here. The risk in that scenario, if you were to buy the blue zone, is that it breaks underneath it and goes lower. Of course, we'd also look for the change of the trend pattern, which is, of course, the black trend line and the trend if that happens. But for the time being, if we're going to buy it, we want to buy on a dip into support. And I'll give you some examples of that happening within this trend. Let's just take a couple of trend lines and put it right here. Here's one example. It fell down towards the trend line into the yellow shaded area a couple times, actually, 1-2 times hitting the yellow zone, finding support and going back up. Here's another example. It fell down towards the black trend line, the purple shaded area, found support, went back up. Here's another example. Fell down, hit the purple shaded area, found support, went back up. So if we're going to trade that pattern of the trend, we actually would like it to fall back down to the blue zone before we can take another buy here for the euro dollar. Do we know it's going to go down to the blue zone? We don't. We don't know if it will. But if it does, we have a plan in place. Buy towards the 0.700 level, targeting back to the green zone or higher in the direction of the trend. Again, if you're going to be more aggressive with your intraday trading, maybe a short from the green shaded area, looking for it to go down there towards the blue zone for the euro dollar today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.